liquor license, escrow, and bulk sale. Anyone who has worked in the restaurant industry in California has likely heard the abbreviation ABC. Its full name is the Department of Alcoholic Beverage Control, the state agency responsible for regulating the sale and service of alcoholic beverages. In California, restaurants must obtain an ABC license in order to serve alcohol on the premises. Types of liquor licenses. There are two primary types of alcohol licenses used in restaurants. Type 41 beer and wine license. Type 47 full liquor license allowing the service of distilled spirits such as whiskey and cocktails. There are also two ways to obtain an ABC license: transfer and original issuance. In restaurant sales transactions, the transfer method is typically used. For a beer and wine license, the transfer fee is slightly over $1,000, and it generally takes 2 to 3 months for the application to be approved and the license issued, unless the seller has violated ABC regulations or the buyer has a DUI history. The license is usually transferred without major issues. For businesses such as sushi restaurants, where alcohol sales are an important revenue source, purchasing a restaurant that already holds a liquor license is often the most efficient and least risky option. What is escrow? The term escrow may be unfamiliar to many people from Japan. However, in California, escrow is commonly opened when purchasing real estate or a restaurant. Escrow is a system designed to ensure that the documentation and procedures between the seller and buyer are handled smoothly and fairly. It may seem abstract at first, but once you experience it, the process is straightforward. In real estate transactions, the deal is essentially complete once the seller transfers title and the buyer pays the purchase price. Restaurant transactions, however, involve additional factors such as unpaid vendor invoices and liquor license transfers. For this reason, the process must follow a special law known as the bulk law. Escrow terminology. The company that handles escrow procedures is called the escrow holder. The documents used to open escrow are the escrow instructions, and the act of preparing these documents is referred to as opening escrow. Typically, the real estate broker handling the transaction requests the escrow opening. The buyer's initial deposit is placed into escrow, and part of that deposit is used to cover escrow-related fees. The escrow company remains neutral and does not take sides with either the seller or the buyer. However, in practice, escrow also functions as a safeguard to prevent sellers from improperly transferring ownership of real estate or a business. For this reason, many of the provisions in the escrow instructions are designed to protect the buyer. UCC search and buyer protection. One of the key procedures conducted during escrow is the UCC search. This search reveals whether the restaurant has used its assets as collateral for loans, or whether there are unpaid taxes owed to the IRS or the California Department of Tax and Fee Administration. If outstanding debts or tax issues are not resolved, the escrow will be cancelled, and the purchase agreement will also be terminated. If the buyer overlooks these issues and completes the purchase, they may inherit the seller's liabilities. This is known as successor's liability. Public notice and vendor claims. The escrow company also publishes a notice in a local newspaper announcing the pending sale of the restaurant and the transfer of the liquor license. Vendors monitor these notices closely. When they learn that one of their restaurant clients has entered escrow, they often stop extending credit and switch to cash-and-delivery terms to secure payment. Vendors may also file claims with the escrow company for outstanding invoices. These claims are paid out of escrow after the seller confirms the amounts owed. Once escrow has closed, vendors can no longer seek payment from the buyer for past due invoices. The bulk sale process. California requires a public notice period before a business sale such as a restaurant transfer can be completed. This system is known as the bulk sale process. When a bulk sale applies, the transaction cannot be completed simply by the seller handing over the business and the buyer paying the price. The sale is only finalized after the escrow process and the required public notice period have been completed. Escrow closing and the closing statement. Once all escrow conditions have been satisfied, the buyer deposits the remaining balance of the purchase price along with the escrow fees. The escrow company then prepares for closing. The final document the buyer receives is the closing statement, which lists all deposits made into escrow and all disbursements paid out through escrow. The seller receives the sale proceeds only after completing additional steps. They must close their accounts with the CDFTA and the EDD Employment Development Department and submit proof of closure to the escrow company. Only then are the funds released to the seller. For more videos, please like, share, and subscribe.